Hi guys, I hope you're having a wonderful day. I wanted to go over something really exciting and something that I've prepared for you guys, and it's called my strategic tax map for therapists. In this tax map, the reason I created it is because working with therapists, then because I work with so many therapists, I have identified the common denominator for successful therapists. So I decided to create this map for you that if you are a therapist, if you are not going down this road, you probably will be going down that road, or if not, you should be asking questions if you should be on that road. Now, everybody's tax situation is different. Everybody's private practice and how everything is handled is different. However, with the clients I work with, these are the items that I have identified that just make a very successful private practice when it comes to taxes. Before we get started, my name is Jeanette Andrada. I am an enrolled agent licensed through the IRS, and I specialize working with therapists in private practice, and I help them save the most amount in taxes using tax and accounting strategies. In my screen here, we're going to see that we have my strategic tax map. And in this tax map, we are going to go over 5 different categories that I foresee you going through if you haven't gone through already. Let's start with our tax foundation. We have 2 categories that we want to make sure that we're looking into. The first one is going to be our bookkeeping, and the next one is going to be our quarterly estimated taxes. Now, bookkeeping is going to be your record keeping. I'm going to go over in more detail here, so I'm not going to talk about it too much. Our quarterly estimated taxes are taxes that we need to pay on a quarterly basis when we are self-employed. And we want to make sure to pay those every quarter to avoid penalties and interest on the money that you owe the IRS. Next, let's get into tax strategy. And these are things that I cannot talk about here in this video because it is really long and I don't want it to be overwhelming, but I will make a video for it eventually. So our tax strategy here is going to include retirement planning, shifting family income, and S corporations. Retirement planning is what it sounds like, is where you are going to maximize your tax benefits using a retirement planning. Like you want to make sure you're selecting the correct retirement plan for your specific situation. That's going to be something that will save you a lot in taxes and also make sure that you are benefiting, in the future for your retirement. The next item is shifting family income. And the whole goal with this tax strategy is to shift income to lower tax brackets in your family. And what that means, it's a fancy way of saying hiring your kids. Hiring your children and hiring your spouse is an excellent tax strategy that is going to save you thousands of dollars. And it is one of my favorite things to implement. And yeah, so that's something that we'll talk about in a later video. As corporations, this is going to be the most common tax strategy that I see. This is the one that I know therapists talk about, that they are questioning, should I make an S corp election? I say this pretty much every video I talk about S corporations. Do not make this tax election unless you know that you are going to benefit, that the benefits are going to outweigh the costs. So just make sure you're talking to an accountant, or that you know how S corps work, and that you're not going to get yourself into something that's going to be challenging to get out of. Let's move back up here to bookkeeping. We're going to talk about bookkeeping first because it is part of our tax foundation. Before you even get to tax strategy, one of the important things is going to be to do your bookkeeping. So for your bookkeeping, what you need to have is you need to have a system in place. A system in place that's going to record all your income and all your expenses. Why is this important? Well, it's important because this is how you do your taxes, and this is how you know how profitable your business is and how much you could reinvest in your business, how much you could pay yourself. So it's really important. You want to make sure to get your bank statements and put them, your bank statements, or connect your bank account to something like QBO, like QuickBooks Online, or Wave. There's also other types of accounting software. I personally use QuickBooks because it is the most universally used and it is the easiest for my clients. So we work exclusively with QuickBooks, but whatever accounting software, the important thing is that you are actually doing your bookkeeping. You're going to want to have a system of going in and you're going to want to make sure that you're categorizing these transactions. When you do your tax return is not going to have a line item for Facebook ads. It's going to have a line item for advertising. So what you want to do is take all your bank information and add categories. So Facebook ads, you have Google ads, all of that is going to go under advertising, and then you have a lump sum that equals advertising. That is what you report to the IRS, and that is how you're going to be categorizing this information. So that way, when you file your tax returns, advertising on your QuickBooks or however your spreadsheet, whatever, is going to match your tax return. You also want to reconcile. This is something that is missed. So something like QuickBooks is going to have a feature that is going to let you compare your bank statements to your QuickBooks account. Let's think about it as balancing the books. Like, who remembers how to balance a checkbook? Maybe not everybody, but you do want to go in and make sure that what is in QuickBooks or your spreadsheet is exactly what's in your bank account. That's called reconciling. The reason it's important is because if you miss certain items, you're going to miss the tax deduction. If you duplicate certain items, you're going to write off certain expenses that you shouldn't have written off. So as you could see, there's a problem there if you were to ever get audited. You also want to keep your receipts. I feel like mostly everything is done online now, so it makes it a lot easier. But if you have a physical receipt, take a picture of it, upload it to QuickBooks if you have that tier where they let you record all your receipts, or just put it in Google Drive. It doesn't have to be something fancy, just save your receipts. So make sure to have a system in place that's going to help keep you organized when it comes to your transactions, your receipts, and whatnot. Second thing is you want to make sure to separate personal versus business. Now, imagine having to go back and reconciling your account or categorizing all your expenses, but now there's a whole bunch of personal expenses intermingled within there. So don't do that. That's probably one of the first things that you should do is separate it. There's, of course, the complication with doing your bookkeeping. So that's one thing, but the really important thing is that it affects your LLC if you have an LLC. If you were to get audited, then it's really hard to determine what is what and to explain things to the IRS. So that's something when it comes to bookkeeping, just keep it separate, keep it separate, have different bank accounts, have different credit cards, don't have it all in one place. Now, having all of this information is really cool because you could get what's called a profit and loss. And a profit and loss is going to be essentially your income minus expenses, and then you have your profit. So that is what a profit and loss statement. You don't have to have a profit, you could have a loss. But essentially, you would have right here is our therapy income. And so let's say that's 100,000. And then you have ads, and you have office, and you have utilities. And then so you have 20,000, you have 2,000, and you have 3,000. That is going to be 25,000. So your profit is going to be 75,000. So this number is the important number because this is how what you get taxed on. That's why it's important to take your tax deductions right here. Oops, right here, because if you're missing any, you are paying more in tax than you should have. Same thing applies to revenues. If you're underreporting, then obviously you're going to get in trouble for not paying taxes on your full income. This number also will help you do your estimated taxes because a lot of times, prospective clients will come to me and say, "Hey, I need to make estimated taxes. How much?" I ask for the profit and loss statement and they don't have one. So the issue is, how do we know how much to pay in taxes if you don't know your income and you don't know what your expenses are? That again is going to vary based off of this number. If you don't have that number, how do you know how much you're going to pay? How do you know when it's time to implement tax strategy? How do you know when it's time to hire someone or if you could even financially hire someone? So as you can see, it's very important. Well, there you have it. That's going to be the number one thing on my tax map. I really recommend for you to have this set up to make sure that you are on a good path. And like I said, the therapists I work with that are successful, that have this whole tax process streamlined, this is the path that they go down. So if you are needing help with bookkeeping, if you're needing help with tax strategy, quarterly estimates, reach out to me. I am accepting new clients at this time for a very limited amount of time, but I am accepting new clients. So if you're interested, please go to the link in my description, go to my strategy session link, and schedule a strategy session. During that time, we will get to know each other. I will, based off of your specific situation, I'm going to make recommendations on what I believe you should be doing in order to meet your tax and accounting goals. Well, if you have any recommendations, any suggestions, any questions, please feel free to reach out and leave me a comment. And don't forget to subscribe. I will talk to you next time.